Fast Retailing is Uniqlo and GU company. This video is a briefing of consolidated business performance for the first half of FY 2024, the 6 months from September 2023 through February 2024, and to explain estimates for the full business year through August 2024. In the first half of FY 2024, the Fast Retailing Group reported a year-on-year rise in revenue and a significant increase in profit, with consolidated revenue increasing by 9.0% year-on-year to 1,598 trillion yen, and operating profit rising by 16.7% to 257 billion yen. Profit attributable to owners of the parent increased by 27.7% to 195.9 billion yen. The revenue performance fell short of expectations, but the operating profit result was roughly in line with the plan. Highlights of the first half performance: Uniqlo, North America, Europe, and Southeast Asia, which are all pillar growth areas for the group as a whole, generated large increases in profit in the first half of FY 2024. They proved the key drivers of overall group growth during the period and helped us achieve a new record performance. Of particular note, Uniqlo operations in North America and Europe are entering a virtuous operational growth cycle, sparked partly by rising affinity toward lifewear, expanding customer bases, and accelerated opening of new stores. The Greater China region is another pillar operation within the Fast Retailing Group. However, that region was only able to generate operating profit of the same level as last year in the face of unseasonal weather and a decline in consumer appetite for apparel. The gross profit margin improved at Uniqlo Japan and all other business segments as we made thorough, stop-and-go decisions on product ordering to ensure close alignment with the latest sales trends. The consolidated operating profit margin also rose year-on-year in the first half. Moving on to look at consolidated income statements. Consolidated revenue increased by 131.6 billion yen to 1.5989 trillion yen in the first half. This was due primarily to an increase in revenue of 128.7 billion yen at Uniqlo International. The consolidated gross profit margin improved by 2.4 points to 52.9% in the first half. This was thanks largely to an improved gross profit margin at Uniqlo Japan. The SG&A to revenue ratio rose by 1.5 points to 37.2%, largely due to a higher SG&A ratio at Uniqlo Japan, following the shortfall in first-half sales. They took the global decision to change the practice followed through FY 2023 of recording year-end bonuses as a lump sum item in August to recording year-end bonuses on a monthly basis from FY 2024. If they strip out this impact, the consolidated SG&A ratio increased by 0.9 point to 36.6%. The net amount of other income expenses stood at 5.9 billion yen. As a result of the above factors, first-half operating profit rose by a considerable 16.7%. The first-half performance for Uniqlo Japan segment, which reported a decline in revenue but a large increase in profit. Uniqlo Japan revenue decreased by 2.0% year-on-year to 485.1 billion yen, while operating profit increased by an impressive 14.7% to 77.2 billion yen. While revenue fell short of recent estimates, operating profit outstripped plan thanks to a higher-than-expected improvement in the gross profit margin, achieved through more successful control over product orders and a bigger-than-planned reduction in SG&A expenses. Moving on to Uniqlo International performance in the first half of FY 2024, Uniqlo International reported large increases in both revenue and profit. Revenue increased by 17.0% to 883.9 billion yen, and operating profit expanded by 23.0% to 150.9 billion yen. Breaking the results down into geographical location, And looking at performance in local currency terms, Uniqlo operations in North America and Europe reported large increases in revenue and profit that exceeded the expectations. The extremely strong performance from these two regions was buoyed by a continued expansion in customer bases as well as rising affinity for lifewear among local customers. Uniqlo Southeast Asia, India, and Australia also reported strong revenue and profit gains that were roughly to plan. Meanwhile, Uniqlo operations in the Greater China region fell short of expectations by reporting higher revenue but very little operating profit growth compared with the previous year. Next, GU operation, which reported higher revenue and a significant increase in profits in the first half, with revenue totaling 159.5 billion yen, by 9.6%, and operating profit climbing to 15.3 billion yen, plus 17.5%. First half same-store sales increased year on year as they prepared ample stocks of products that captured mass fashion trends and worked hard to strengthen sales. These efforts helped generate strong sales of heavyweight sweatshirts, heat-padded outerwear, cargo pants, wide jeans, and other items. Balance sheet as it stood at the end of February 2024, compared with the end of February 2023, total assets increased by 480.2 billion yen to 3.4958 trillion yen. Total liabilities increased by 70.5 billion yen to 1.4281 trillion yen. Total equity increased by 409.6 billion yen to 2.0676 trillion yen. Looking next at the cash flow position for the first half of FY 2024. Cash flow from operating activities totaled 322.3 billion yen. Cash used in investing activities totaled 54.1 billion yen, and cash used in financing activities totaled 131.4 billion yen. As a result, the closing balance of cash and cash equivalents had risen by 162.5 billion yen at the end of February 2024 to 1.0658 trillion yen. Business forecasts for the full year ending August 31st, 2024. They are predicting full-year consolidated revenue of 3.0300 trillion yen, plus a 9.5%. Business profit of 450.0 billion yen, plus 17.8%. And operating profit of 450.00 billion yen, plus 118.1%. They decided to revise down the estimates for consolidated revenue by 20 billion yen to reflect the shortfall in first-half sales. However, given the fact that first-half business profit and operating profit came in roughly in line with expectations, the forecasts for these two measures remain unchanged from our most recent estimates of 450 billion yen each. In addition, they expect to record a net 50 billion yen in interest income and expenses under finance income net of costs. They have not incorporated any foreign exchange gains or losses at this point in time, owing to the current opaque nature of foreign exchange trends. As a result of the above, they are now predicting a 8.0% increase in profit attributable to owners of the parent in FY 2024 to 320 billion yen. Finally, dividend policy for FY 2024. The board confirmed a scheduled interim dividend of 175 yen per share. This represents a 50 yen increase compared with the previous year. In addition, they expect to pay a year-end dividend of 175 yen per share. That would result in an expected annual dividend for FY 2024 of 350 yen, an increase of 60 yen compared with FY 2023.